Hi everybody, my name is Mary Redmond. I'm talking right now about the pound-dollar pair. So I like this pair going into this week, shorting on a move upward. This is going to be a difficult trading week for Monday and Tuesday probably because the Fed meeting is on Wednesday and then there's a press conference with Mr. Bernanke afterwards. So with the US dollar pairs, you frequently get choppy, erratic movement. You get fairly low liquidity, generally speaking, the day before a Fed meeting or the first day of a Fed meeting before they make the announcement. So that leads to difficult trading conditions. And in addition to that, we also have the constant barrage of information about the EU and what conditions are going to be attached to the next tranche of aid. When is that coming? What type of changes are going to be made in the Greek government? So there's going to be news constantly coming out about this, probably for several weeks, and it's an ongoing problem that's not really going to be resolved with one meeting of the EU finance ministers. And there are going to be additional loans made to the other countries, Portugal and Ireland. The question is whether or not these are going to be paid back and how quickly they're going to be paid back, and whether or not these governments are going to be continuing to agree to the austerity measures. So that's an issue that's going to be going back and forth for a period of time. And you also have the problem with the U.S. government and some delay on increasing the debt ceiling. So now the chances that they'll approve an increase in the debt ceiling before August 31st are only 50%. Last week they were up to 85% at one point. So there's no chart for this. And it's the type of thing that can cause a lot of erratic movements in the market and a lot of volatility in the dollar index. So that also adds to the difficult trading conditions. And you can see a chart of the dollar here. It looks to me like we are in an upward channel here, and it might be bouncing at the bottom of this upward channel. And of course, primarily what's going to be the next determinant of the move is that any type of statement from the Federal Reserve and any type of clear indication that they're going to be ending the quantitative easing and that they're not going to be beginning any additional quantitative easing measures going forward. So we'll have to see what they say. And there may not be a break of this index until after Wednesday and after the Fed meeting. But one of the reasons I'm targeting the cable pair, the pound-dollar pair, as one of the better ones going forward this week, as a potential short if it does hit the previous support and now resistance level of this particular weekly chart pattern. And if you look at it on a weekly chart, it looks like it has broken out of its long-term yearly upward trending pattern. Now we've got the long-term chart here, and this is a weekly chart of the pound, and you can see it did make a couple of false breaks before, but it looks like it's really settling outside of this particular trend. And you've also got a downward channel here forming, which is pretty strong. And if it were to hit the top of this channel, the 6360 level, that could be a short. I also might be inclined to short up around the 6250 level. And part of the reason for the weakness, potential weakness in the pound going forward, in my opinion, is the fact that the Bank of England is going to be increasingly less likely to raise rates. Now, economic reports have come out on the weak side, including the CPI, which was reported last week on a year-over-year basis of 3.3%. That was slightly lower than was the previous month. And so the expectations that the Bank of England are going to raise rates now are only in the range of 30 basis points for the coming 12 months. And the pound hasn't really responded as much as it possibly could be, or as much as it will be in the future. That's the basis for what I'm thinking. And in addition to that, we've seen some weaker economic reports coming out of the UK in terms of a higher jobless claims number, weaker industrial production, and a decrease in housing prices. And of course, they're also exposed to the ongoing sovereign debt issues in the EU because the EU as a whole is one of their biggest trading partners. So an economic downturn in Europe is going to affect the UK economy. And in addition to that, the bank exposure of the UK banks is considerable, and they have over close to 100 billion in pounds in exposure estimated to the loans in Spain as well as in Ireland, and approximately 25 billion pounds of exposure to the Greece. So the problem with this is that the UK is not really contributing to the European Financial Stability Fund, and if Germany and France are the countries which are contributing to this particular fund, then it's probable that their banks are going to be the first ones to get priority on whatever funds are available. So if Greece can't pay back all of its bank loans, it's probably going to pay back the ones to Germany and France if they're the ones putting up the money for the Financial Stability Fund. Now that might put the UK banks in even more of a vulnerable position. So all of this, in addition to the technical chart patterns, I think are going to weigh on the pound. Although I wouldn't necessarily recommend taking a big position before the FOMC rate decision. And you can see, as you see the chart action today, it's really very choppy and erratic movement. And also looking at the stock markets and the particular paradigms, such as the dollar goes up when the stock markets go down, that hasn't really changed. And what we've seen here is a point and figure chart pattern of the S&P 500, which is probably the largest proxy for the global stock markets. It hasn't really broken out of its bearish pattern. It's in a slight rally today, but the fact of the matter is we're going to have to clear some very difficult technical resistance levels before we actually begin or resume a new bull market in the S&P. And if you look at the UK stock market index, this looks even worse than the S&P. This looks like they've really broken out of a long-term upward trend line and made a rounded top here. So if that's a harbinger for movement in the pound, it doesn't look particularly encouraging. So what I'm thinking about doing is, if there is a movement up here, I might take a small position prior to the Fed meeting. Otherwise, I would be inclined to short cable going forward if we see a movement upward in the dollar index, particularly if the Fed gives any type of a clear indication that the quantitative easing is going to end, that they may be monitoring inflation going forward, and that the fact is that they feel that there is some type of a economic recovery which is going to continue in the US. And that's one of my favorite trades for this week.